Hey everyone, welcome to the Sofa Q&A. Now it's AKA as 5 Question Friday, which every Friday I will answer 5 questions from my email list, from my trading forum partners and students, etc. My team will pick 5 questions for me. I haven't read the questions. I'm gonna pick up the question, answer live, unedited for you. Now the questions can be trading, can be finances, can be anything to do in life. If you ask, you will get answers. So let's start it. All right. So first question we have for this Friday: why trade the forex market, not the stock or option or future markets? It's a very good question. Um, I actually started trading in the stock market when I started trading. I think almost 10 years ago. And it's about 5 years ago, I slowly transitioned to now focus more on forex trading. So to answer your question, actually, there's no there's no right or wrong answers. I mean, people make money regardless of what market they trade. You can trade stock market, you can trade future option, and forex. Anything you do is really depend on your game, like how good you are in this kind of market. So I guess to answer the question more clearly is to tell you the differences between these markets, and maybe you will be better understand how you will fit into those markets. So first of all, stock market is the most common one. Everybody know, you buying a stock, basically you're buying a share of this company. And when you buying a currency, a forex market, you're buying underlying currency for that country. Now, future and options a contract, so it's more like a derivative from the actual thing. Option can be option forex, it can be an option, it can be option futures, it can be everything like that. So again, the underlying instrument does not have too much differences. It really depends on what your style like, and also what are you comfortable with. So for me personally, I start with stock originally because that's what I knew back then. I didn't know much about forex, much about other things, and for me it's just more easy to understand. You buying a share with this amount of money per share. If you buy 100 share, 200 share, you just multiple it, and you know how much money you spend. Slowly transitioning to forex, I think few big points. First of all is the timing. When I was trading stock market, I was living in the West Coast. So the market opened at 9:30 a.m., which is like 6:30 a.m. West Coast time. And a lot of time I was just really, really tired. Not to mention the beginning traders, you have so many things to learn, to conquer, and the market stop in the afternoon, East Coast. So I just don't really like the timing to trade, stock market, especially U.S. equity in West Coast. The second thing is that I hate gaps. So if you trade stocks, you will always have gaps unless you are day in and day out. So if you don't hold any position overnight, you're fine, right? That's not to mention about if you doing a pre-market or after-market hour. Let's just say if you're doing a regular stock market hour, there's always gaps. And when there's a gap, that means your stop loss is not guaranteed. Of course, in the forex market, it's not guaranteed also, but at least you have more control because the market is 24/7, excluding weekends. So for me personally, I just hate gaps because I like to know how much money I'm risking, and I want that risk to be a set amount. So a lot of time when I was in stock trading, I do swing trading. Maybe I put my stop loss, maybe I enter at 10 and I say I want to get out at 9.60, $9.60. And next morning it gapped down like $1.50. I just lost, way more than what I was willing to lose. And it never happened in forex market. Again, excluding weekends. If you trade Monday to Friday and you exit everything before the market close, you don't really have that kind of situation. Of course, sometimes you have a black swan event. That means you have a very volatile market. But accept those time and accept those pairs. Generally speaking, you will always be able to get out in your stop loss point in forex market because the liquidity is just too huge, right? Forex market, I don't have the exact number, but I think it's about 3 trillion dollar to be traded every single day. So the liquidity is just so huge, and that's why I like about it. And you will never be in front of a computer and say, "Hey man, there's no movement." No, because there's always movement in the forex market. Where versus the stock market, that's not necessarily the case. So for me personally, I like the timing of forex market. I like the liquidity, and I like the fact that it does not have gaps, excluding Sundays, of course, excluding weekends. Otherwise, the weekdays there's no gaps. And also, I think the last thing I like is about leverage. Now, leverage for me is not a big deal because I did start with uh, pretty good capitals, but for people maybe does not have that much capital to start with, I think Forex is a great leverage tool for you. Of course, leverage is it's a sword with two edges. Sorry, I forgot the phrase, but leverage, it can become a great tool, but it can also hurt you. So you want to be careful about leverage. However, if you start with $1,000, $2,000 with Forex, you can easily make that money back relatively fast if you know what you're doing because the huge leverage that you have. Where in stock, you only get maybe 2 to 1 at best in the most brokerage. Some brokerage they'll offer you 20 to 1, but it's not like Forex. You get 50 to 1, 100 to 1, or even 1,000 to 1. So the leverage itself, it's a good point, especially for people who does not start with a lot of capitals. Now for option and future, personally, to be honest, I don't trade those two instruments too much. But for me, option is just again, I don't know, right? I'm not specializing in options. I know people who specialize in options, but for me, it's a little bit complicated because there's a lot of strategy in options, and it's all about the mathematical calculations in options. Now, I do options when I use it as insurance, right? So you know, you maybe buy a stock and then you buy a call, you buy a put, you just use it as insurance or use it as a cash flow. So you have a stock and you sell a cover put, and you make money every month as a cash flow to make the premium. You can do that as well. I did that before. So yeah, option, I think it's a great way to look into it. But personally, I'm not specialized in that, so I don't really know much about it. Future, same thing. In the future, the one thing that downside for me is I think the uh, the margin is just really high in futures, especially overnight. So a lot of people do future currency. A lot of people do the spot forex. So I think the main difference is that the amount of money required you to hold the future contract is way much higher than holding a currency pair. And for me, it's just more simple to trade currency. You only had few major pairs, right? For me personally, I only trade, you know, 3 to 5 major pairs every single given moment. And the calculation is so easy. You just calculate the pips, and the market is transparent liquidity. There's no money makers, and then you can trade 24/7, excluding weekends. There's no gap. You have a great leverage. It's just a great game for me. It's just better for me as a trader. Of course, there's also a lot of downside, but we'll talk more about the downside of forex market. So far, just give you the difference between stock market and forex market. Okay, thank you very much for watching. I'll be answering the second question in next video.